Okay, so I am live, and I'm half wondering if I should go public or not. I don't know. I don't seem to do very well when I go public with stuff and get all cocky. I don't know. It's so weird being on this side of the microphone and having to do things and tell people to not do things, but it's one thing to give your perspective. It's another thing just kind of put the whole strategy. Like most of the things I put out there don't actually work out. And most things don't actually work out. So I guess that makes a lot of sense. So I don't know, let's keep it private, I guess. But all right, the point of the stream today is to finalize a little bit more of the gold and silver trade. I want to do some more charting and see where, see if I'm missing something. See if I'm missing something. So we're basically right now looking at silver basically going parabolic. All right. If we don't pull back into the 10-day line again, then we're going to be having an acceleration. Okay, the last time we accelerated, dog, shut up. Jesus. Oh, I guess someone's here. All right, so all right, someone just showed up to the house, so lovely how that works. It'll probably be a little louder. Um, so yeah, the last time we accelerated a little bit, we did pull back in towards the 10-day line. If you pull into the 10-day line right now, it's going to be, hey, what's up, Blair? Oh, am I actually public? I didn't want to go public. Yeah, I guess I'm public. Damn it, I forgot about that. Well, okay. Well, this guarantees this trade's going to fail now. I think the last couple times I tried to do this publicly, um, I don't remember all the trades, but they seem to never work out. So I don't know if this one's going to work out or not, but I already ran this scenario in today's Power Hour, and it was monster. So I just wanted to double check my homework before the market opened tomorrow and go through silver and gold specifically, go a little bit deeper. So yeah, here we go. So the way that I'm viewing this right now is, so silver's in a parabolic state. It's just in a parabola. We haven't topped yet, and we're not even at the 10-day. Look at these last 3 days with just huge volume. You've got two of the largest 4 volume days of this whole run right here. And then you have the 5th largest volume day, which was Friday, closing in a pretty good spot. And also massive volume. And we haven't pulled back the 10-day. We're still well above the 10-day moving average. Silver, historically, I don't even know if it ever extends from the 10-day unless it's in a parabola. So here you get a little extension, a little extension. I mean, come on, silver is just this garbage. But during these extreme events, here's a mini one. For whatever reason, I don't even know. Oh, coming out of 2020, yeah, everything ran during that time. So anyway, it looks like we're in the middle of a parabola. You can look at Bitcoin 2020 or 2017, which we will do, and then we'll look at some other ones as well, some other parabolas. But typically, what happens is you will get a consolidation of some type. It doesn't even have to be coming out of a base, and then you will actually go parabolic, which is a vertical move that leads into the ultimate top, right? And we've been training on these now for a very long time. I don't know. I don't know. I don't know who does it, how we do it. Everyone that I've ever followed, or looked at, I don't really follow anybody, but anyone that I've ever looked at, other than like the greats, the William O'Neills, don't actually model these. And I've modeled them substantially. I've done a lot of modeling on these, and we're a little bit late to this one. But the gist of it is, okay, we broke out from a base, and this is a late stage base too. Silver's been on a run. Silver started here at 20, came up here based at 31, based again here at 35, so that'd be a base on base pattern, based here again at 50, and now we're running up. I don't know if the large numbers apply to SLV, because if you look at silver, it's already at 93. Silver is the actual silver exchange thing. SLV is an ETF. So I don't know if the same large number rules apply. I'm assuming they don't. And so I'm just simply going off of percentages. And if you're looking at a blow-off top is basically 50 to 100% run in 2 to 3 weeks is what it is. So if you take this as the little consolidation and you go to 50%, you're at about 110. And then if you go to about 100%, going to a round number, you're at around 150. So do with that what you will. It's a big run in a short period of time, and that would end the silver run. That would kill it for however long it kills it for, and that's kind of how parabolas work. Sometimes they kill them for really long periods of time, and other times they kill them for less periods of time. So if we go to silver, we can look at other parabolas. There's one in 2011. This was fairly parabolic. It didn't have the same kind of rounding up that this one does, which in my mind makes it better. It just does. And if you're looking at pi method trend lines and such, which I tend to do, then you're left with just which I haven't looked at this chart yet. If you look at pi method trend lines, we're stuck with this. Okay, and you get you don't have volume here. Oh, it's SLV. It's a silver trade. That's why you're left with a stalling candle here, which is an exit signal. That is an exit signal. And then, but if you want to stay like with the pi method, there's two ways to do it. You can do that. Yeah, I know. That's what I was saying, Blair. When I started, I'm like, well, this kills this idea. So there's an exit right there. Or if you're really lucky, you would probably be able to find it in the day on this day. I don't think I can go back to it on this. That's back in 2011. You don't get data that far back. But any exit up here is great. So, and I don't know if this is going to be 100%. Probably not. 35%. So that's a 35% run. Still a parabola of sorts. Parabolic move of sorts. Not a parabola, though. We are in a parabola. This is different. This is a bit of a different animal. You look at, BTC. So there's a little bit more of a parabola. And that went from 10 to 15. So that went 50% from its last consolidation in a very straight up way. So this one isn't bad. So that went 40 days. I don't want to count that peak. I want to count that peak. So that went 46 days for it to just fully go parabolic from here. So we could be right around here. So that put us at about 26 days. And that was for a 36% move. From there, I'm still, like I said, I'm still counting from here. Maybe even here. Could be here, though. So if you're looking for a double or 50%. Now, I don't think we went up that far here. See, that's only a 40% move. We're in a much stronger position, I feel. We'll look at it in a little bit. So there's a large consolidation. Looks like more like Gold's chart. Large consolidation. So there you went 100%, but obviously it took a lot shorter. It took a lot longer. And then you get silver here, and we're going from 23. We're already up 300%. So this is a whole different beast, and I think it can be more aggressive. So that's the trade. The trade is for this to go in a full-blown parabola. If you want to call this 50%, you're looking at 125. So let's go ahead and start writing some things down. Yeah, I would be too, Blair. So we're looking for a 50% run, and we're going to model different things here. So 50% run puts us at 125. And then, obviously, it goes up from there. So if we go to 100% run, we're at 168. And we have no idea, and we cannot know exactly where this is going to go. All we can do is is place scenarios upon the chart. That's literally all we can do. But you look at the parabola that's being formed here, and I mean, it's there. It can stall, yes. I mean, 100%. It can stall tomorrow. Just depends how you want to draw this. And I think these can be difficult to draw. So that seems more immediate. Let's use that one. And yeah, if you use this as your guidepost, then you're looking at going parabolic very, very, very soon. Like, very, very soon. So this is February 17th. That's about a month out. And I'm sure if you extend this, can I extend to the right? I don't know if this really can't do that, I guess. Trend lines you can extend to the right. But again, using the trend lines as the guidepost for the trend. Now look at this. We just extended. We just consolidated. And we're pulling in here on the overnight, which is fine. It's whatever. So it depends what lines we hold, right? It depends what lines we hold. If we hold this line, it's just a straight up parabola. And it'll happen very, very quickly. So we can put a line at 125. And we can also put a line at 168. And you can extend these lines out. And again, if the trend stays intact, what you're looking at is, you know, the big top at February 25th. That's like the late, like that's if it goes here and goes up. But I mean, if it's a parabola, it'll very likely extend up again. Does that make sense? Like it'll put another. It may not be that aggressive. It may be less aggressive, but it'll still top before it hits the apex of this potential triangle. So that's about February 12th. I'm just drawing garbage lines here. These are all just garbage lines. So let's go back to Bitcoin because I do want to look at the 2017. And we get 100% run from the 10,000 level. What the hell is this crap? 2020. Okay. All right, so here's Bitcoin's parabola. Also, you get the parabolic shape. I think this is very akin to what we're going through right now potentially. You know, you're in this big parabola. So Bitcoin had the biggest flip to do at 10,000. Actually got to about 11,000. And so this, you know. This is very similar. You get a big base, you get a small consolidation, another small consolidation. And this one took 12 days to go from 10,000 to 20,000. We're not going to get that aggressive. I don't think we're going to get a double from where we were. 160. It seems aggressive, but they all seem aggressive. But if you look at it and we draw our trend lines again, you know, I'm hoping we're here. I'm hoping we're right here at this precipice, and we could just launch. So whether you sell there or hold and sell later, I guess is up to you. But this is obviously that's 50% run in 2 days. Now that's crazy. It's possible, but it's crazy. So you're in a parabola. You're in the last stages of a parabola, and I've studied these. I mean. Not as deeply as I would like to, but I've done a lot of work on parabolas, developed my pi method, trading parabolas. I've traded parabolas using the pi method. They're not necessarily blow off tops. This is a blow off top. It's a very specific setup. Let's be clear. It's a very specific setup. It's not, oh, I'm trading this for some random stuff. Nothing I do is random. Some things are best guesses, absolutely, but they're not random. So yeah, I mean, Bitcoin is a model for this. You're in a run up, You're sitting right here. You think you could be done. You stall out, but you don't stall out. You come right back. You hold the 10-day line. Silver's even above this in terms of the 10-day line. Silver's up here. Bitcoin's way less volatile or more volatile than silver. And maybe that's why the 10-day caught up with it. But you get the point. The point is that we're consolidating well above the 10-day moving average. Right now. I guess we did pull back to it here, so not too bad. But this didn't even pull back. So, we could go sideways, but these trend lines are guideposts. If this trend line doesn't exist, if this trend line holds, again, you're looking at 124 by February 6th. So now what do? Well, now we start to look at potential trades, okay? And we need to look at gold too, but we start looking at potential trades here. What that leads you to, for me, look, if you can't trade options, I say there's something called the AGQ, which is right here. This is a 2x silver ETF. First of all, you put money in that, unless you can find a 3x silver ETF. There's probably some silver miners. I don't really trade the individual names, though. I think this is more of a pure move, and so I do that. So now we look at potentials. So you've got, and I usually play things a little bit safe, but if you're actually going to be in a parabola, I think you are a little aggressive, and I do think this is one that calls for multiple positions. So multiple legs to the trade. Okay, you could set up for trades to the 125 so 160. I just called it 150 because it's about 75. So about 150. Yeah, from the breakout point here. So about 150. I'll do it again to 150. So my trade earlier was to 150. Yeah, there we go. Yeah, because AGQ, it's a 2x silver ETF. So here's the thing, Blah. Here's one of the things that I've really honed in on the past several years is understanding the tools available to you will just make you just 10x the money that you would make over a period of time. What I mean by that is that if you know how to trade SOXL, if you know how to trade AGQ, if you know how to trade the TQQQ, why would you settle for just a standard index fund? Why wouldn't you trade the leveraged fund? Because over time, that leverage isn't going to give you 2 times. It's going to give you many multiples of that. So we use these to our advantage, okay? It's exactly how we operate because we're not idiots. We're not stupid. We can have bad trades, and this whole thing may suck. It may die tomorrow. I may never even enter this trade depending on how the overnight action looks and depending how it opens. But the fact of the matter is we use these tools at our disposal. So the AGQ is a great vehicle. UGL for gold, that's what this is, UGL. That's, and gold is, kind of barely breaking out, holding above the 10-day. It's doing its thing too. But silver could be in the tail end of a parabolic run, or maybe we're going to cross all these trend lines and just consolidate from here or pull back. Who knows? But it's definitely symptomatic for a parabolic run, and I want to prepare for this. So we're looking at potential options trades. So let's put a couple scenarios on the board. I think if you go very vertical, we're looking at something like this. If we just go straight up, now I'm not going to plan every candle, but if you look at Bitcoin's chart, if you look at Bitcoin's chart, I think that is something that we can utilize, because if you look at these candles at the end here, they end up being really big candles. These two candles, 18% and 20.5%. They are huge. Those are absolutely astonishingly massive candles. This one here's 9. That's 9%. Okay, you get these ones, which looks like about 5 or so. So that's about 6%. The next one's about 6.5. This one looks to be about 4. And this one's probably about 2. And then you chop, and then you have a massive candle here, 9%. And then you have your big boy candles, bop, bop. And I mean, this alone, in my opinion, could be sellable. I mean, come on. If you're not, you have to sell at some point, you know. And I know it 10K people were thinking, 25, 50K at that point, but at some point you just have to realize that. Hey, what's up, English? At some point, you just have to realize when the getting's good. This is one of those points. I mean, if you're up several 100% on an options trade, holding for what is 20 grand, no one knows going to stall at 20 grand. The only clue that you had was going to stall at 20 grand was the fact that you didn't have any volume on the way up here. Everyone bought right there. Everybody waited, and everyone started to sell. Okay, when it didn't really cross 20K. So that's what happened here. Silver could do the same at 150. I mean, if we're super lucky, and I doubt it gets to 200, maybe that 168, but it'll be a big round number probably. That's typically how these things work. So if we're looking for silver to have a big day, silver's already had, I mean, a couple of, 9% days, I think. Yeah, there's a 10% day. Those are two big days. So you could be looking at a singular, let's go 15% day. Let's go 15% day. So if that's your top, if we top at 125 and you hold the trend line, that's January 22nd. It's like 3 days from now. Okay? I mean, so let's just write down some scenarios. This is very aggressive. I mean, very aggressive. We're looking at 125 at January 22nd. $125, that's very, very aggressive. And this is, again, saying we have a 15% day. I don't know if we're going to get a 15% day. Maybe we get 2 8% days, or we get 3 8 or 9% days. I don't know how it's going to go. Maybe there's some more information I could probably do, but I just don't have that much time left. But let's just say we get a 15. And then let's say we get up here to the 150. So at that point, we're looking at January 27th. All right, and I highly doubt we're going to get to this one, but so now keep in mind, I just made up this trend line out of thin blue air, okay? Clear sky, January 29th. That's 168. Okay, so that's like the most aggressive thing I can think of. And then your next one would be something like this, where we're parabolic, but we're just extending up a little bit. And I mean, we could even keep this trajectory. And I guess we'll run that one next. So we'll go kind of 50% in the middle here. So that would be January 26th. We'll call this aggressive. And we're talking about parabolic moves, so duh, of course we're going to be aggressive. So we do the 125, 150, and then the 168. And that would be January 26th. And then 150 would be February 2nd. And then the 168 would, which I still don't think, it seems very aggressive to me, February 5th. Again, keep in mind, all of this can just go away tomorrow. If you're looking for a parabolic run, I feel some people run into these like looking for a parabolic run. I just see one. I happen to see one. I'm looking, although I guess I did look for one in gold too, and that one failed. But anyway, okay. So those are those ones. Let's be less aggressive. Let's say we go 100% from 58, which could happen. That's the last base. So that's 118. Okay, so let's say we're already well into this parabolic run, and we're going to top it about 100%. That would be the 118. Just making notes here for me. Okay, so that's 118, and we can use the same 15% bar. And since we've already got this, I mean, it have to happen. So that's January 27th. That's obviously super hyper aggressive. That's in 8 days. So that's quite a bit. And I don't know, it feels like silver's got a little bit more to it. This market in 2026 just started. So how about, like, part of me has a hard time thinking that this is going to stop so soon just because it's like January. But I mean, stocks are kind of weird at the same time. Like, look at the NASDAQ. It's gapping down but coming back. I don't know. All you can do is trade the chart in front of you. So, okay, so I got like 7 different potential trades. So that's very aggressive for a lower target, but an earlier time frame. And I'm not using this one because this doesn't exist, and this line does. So I'm going to use that one. What else? I mean, if you want to get more aggressive, which I don't even know if that's possible, I guess it is. Buy green coin? Yes, exactly. Buy green coin. Okay, so I'm going to lay out a few options trades now. Like my ear itches inside my ear, you know? It's kind of weird. All right, so I'm going to number these on my sheet because I did this in a way that isn't conducive to me. Yeah, I need to get my DaVinci platform going, son. What's aggressive versus realistic? It's all realistic and it's all aggressive, blood. That's the whole point, okay? At this point, you've been practicing for the prize fight now for 6 months, okay? And then so someone asks you, well, what's realistic? What round are you going to win in? Like, you don't know. So all you can do is plan for scenarios and then execute your plan. That's all you can do. That's literally all you can do. There's no, it's all realistic and it's all aggressive. I try not to do anything that is too unrealistic, if that makes sense. And I'll be honest with you, in certain more than a few circumstances, the more aggressive thing wins. So I took this silver trade, like I fucked this up pretty good. I bought silver like at the best possible spot, like I don't know if it's exactly here or here, like right in this area. No, I bought it 48. Wasn't it? Yeah, 48. So was it 48? 46. That was 46. 46. It was 46. I bought it 46. I bought this perfectly, and because I'm a fallible human being, I sold on this dip. So go ahead and kick me in the junk. And I had a couple of trades on one. Actually, I'm not sure what all the expiration dates were. One was January 26th, which I would have had to sell on this day for the biggest profit in human history. I was up 600% when I sold right there. So imagine what the fuck that would have been. So I screw up trades all the time, Bleb, but I really try to be, on the right side of history, I guess, whatever. But it's all possible. I'm just noticing a potential blow off top. You start getting acceleration here. Like if that low holds, keep in mind right now we're here. So we're going to gap up above this trend line. If we hold this trend line, which is iffy, if we hold the trend line, I hope it happens, and then you are literally looking at it walking up on that elevation. Oh, damn it. It's the wrong fucking... I did all that work for nothing. Ugh. Oh, screw me. All right. I was doing it on silver, not SLV. I can't trade that. I can trade this, though. I suck. Okay. Let's do... let me do all this again. Maybe even do it in a way that makes me able to actually use it. So we have very aggressive. We have a 15% day. Let's just call it a 12%, I guess. Okay, 12% day. We'll keep this trend line. We'll just say this is the trend line, okay? And then we'll extend up from our potential targets. And we said one of them was 100% from here, which is 98. And then let's do 50% from this consolidation, which is 107. And then we can do a 75% from the consolidation, which is 125. Okay, so 125 latest is February 29th, but if we hold that trend line, we're looking at February 4th. And then we could get like one big day up here and hit that 98. Seems unlikely though. Like I'd have to do it Tuesday or Wednesday. Yeah, so there's that one. So that'd have to be January 23rd if it happened right there. Not a big squeeze on that one. That would kind of, murder trades a little bit. And then we have 50% from consolidation at 107. I keep forgetting you guys can hear everything on my keyboard now because my stupid software is not working. So that would be January 28th. And the trades I was looking at earlier was 150 and 110. So yeah, I have 110 kind of on here. So we can just work with those, though. I think that's okay. February 6th and February 20th. Both of those are in January, so I think that's well within reason if we go blow off top. Could go blow off top right there and just be done for a while or for longer than a while. But such volume here. There's so much volume here. It's crazy. Okay, so that's 3 trades. What did I have in the other one? Like a lot more than that. It's 7. I hate when I have to redo work. So I don't know if maybe we just stick with this trend line because it's established and we're gapping up here on the open. So I think that's good. So right now, oh yeah, it doesn't show it, but we are, what are we on the SLV? We are at 84.6. Yeah, so we are 84.6. We're right there. So that's right where we're gapping up tomorrow. Can I go left? Oh, I can move it a little bit. That's cool. So we're gonna be right there. We're open, well, at least, according to right now, for whatever the heck that's worth. Oh, wow. Okay. I guess it snaps to the day. I didn't actually realize that ever. So we're there right now. That's where we're at. So if we can hold this trend line, it's got to move up tomorrow, or the day after tomorrow. So we're not really in a bad spot. Okay, let's run. I got these 3 scenarios. 100% from base would be 98 by January 23rd. 50% from the consolidation is 107 on the 28th, and then 75% from the consolidation is 125 on the 4th. So I'm going to run through those on my option software. And you know what? I won't show you that, but I will show you that. This is what we did earlier on the silver trade. This was for the 150. And if you guys make all this money, you guys owe me like actual real money. Just send me real money if this works. Because why the hell not? And if it works, I won't even need your money. So SLV. All right, so we're going to do SLV round 2. Target 98. And we're going to go, so January 23rd, I have a January 23rd. I also have a January 26th, so let's just do that. January, give ourselves a couple more days, and we're at 98. So I don't know if this is going to work out super hot. I guess we'll find out here. So 98. So I got a Claude model that I trained to do my thing since I no longer have a calculator. In case anyone knows about my calculator and knows I don't have it. Okay, so not bad. So we're looking at, man, this isn't nearly as good as I thought this was going to be. We're looking at 540 for the 91. So we're looking at January 26th, 91 for 541%. All right, pretty good. Not amazing, but good. Really good. All right, next one is going to be for January 28th, so we'll go February 2nd, which apparently has no bid price, so I can't even do that. February 4th, which also has no bid price, I can't do that. February 6th does, though. And 107. Oh, geez, they have way too many strike prices. Way too many strike prices. This is going to be different than what I did earlier. I don't know what the difference is. Yeah, that doesn't look very great. This is normal. That one's not very great. 93.5. This is February 6th. Man, I must have been really out of my mind earlier this morning or something. I don't know. I've been convinced all day about this. 93. Well, let's do the 93. Whatever. For 418%. And then, yeah, if the 125 works, that one's actually probably going to be good. That's February 4th. I have a February 6th, but I'd like to give it a little bit more time. Let's do February 20th. That gives it 32 days. This is more akin to, what the hell? What kind of loosey-goosey crap is this? NA. Well, there's no market for silver. But look at all this open interest. Tons of open interest. I think they must have expanded. They must have added all these individual single strike prices. Yeah, that's all I can guess. Well, this kind of screws with my thing a little bit. What do we got? February 4th? I'm guessing go February 13th. How does that look? All right, February 13th. Fine. For 125. Oh, yeah. See, this one's going to be gangbusters. And this is for 125 target. This one's going to be crazy money. As it should be. And then we'll do what I did earlier today with those two strike prices. We're at 99. Yeah, 1,000. That's better. Jeez, it's still not that great. So SLV's at, what do we say we're at? We're at 86. So you can get 800% for 93. That's pretty good. If we start breaking out, 93 is a reasonable place for it to go. And you're still getting 800% versus you're only getting 1,000%. You're not even breaching 1100s for all that additional risk. Doesn't make any sense. I mean, I may as well just stick with this 89, so we're not, you know, I mean, it's not that much more. I'm going to go with the 89. This is disappointing. At least compared to what I saw this morning. Of course, you get big numbers, you get greedy, so I was getting greedy. Okay, so that's what I got for silver for that. Now, what I was doing earlier, let's see if what I was talking about earlier makes any sense. I mean, it could. We could move up for a little bit further, and I had 150 doubling from this $75 breakout. That's where I had it doubling from. So just kind of some round numbers. But let's go further. Yeah, it is what it is. I know. So let's just call this a consolidation. We'll go up 100% from there. Let's just do 80%. Let's go a little bit less aggressive. We'll do 80%, which is 129. It's really close to the 125 we did. Yeah, it's basically the same damn thing. It's basically the same thing. So I would probably still say that for 700%, that February 13th 89 strike is very likely the way to go. Very, very likely the way to go. I mean, 700 is still good. If it gets to 150, if you have a couple of these big old days, you got a couple of these back to back, and I don't know what the hell fills the time in there, but I think I had this going to, where's my paper? I had that for February 20th. So that's the last. So if we top on that day, I mean, that's reasonable. I just kind of, really wouldn't hold that trend line though. But most parabolas should hold it, so it should top prior to that. If it gets up to that level, which is pretty insane, maybe you chop up and then you go bop bop, kind of like what Bitcoin did. And Bitcoin went up even further than that. That'll put you at February 9th. I'm already on February 13th. So what are the trades I had earlier? Those are such crazy percentages. Oh, that was if it happened really soon. Oh, okay. Okay, now it's coming back to me. I had one trade for February 20th, and I said, what happened? And then I said, okay, well, what happens if it happens like this week? And it was still the same target, but it was just happening like February 6th is what I had, which gave it like 16 days. That's what it was. 18 days. Right? Let me see here. February 6th, 97. Let me look at my sheet here. The cheapest trade on my sheet was 985%. Oh no, 210%. 210% was for SLV to get to 110. By whenever. It's just like 110. So SLV to 110 by February 20th was 210%. See, that's more in line with where we originally started at 500%. But if it went to 150 by February 20th, it was 985%. From there to there. Or from there to there, I guess, in this case. If this trend line holds. So I guess that's one of the questions, right? Does this trend line hold, or does it, if it gets caught, then is the parabolic move over? I need more examples of parabolic runs. I just need more examples. But I like the volume signature. I like holding above the 10-day moving average. The action this weekend's encouraging, gapping right back up to highs. I kind of rather like that we're not, just pegging highs. But this can jump up here in 3 minutes, so I wouldn't even really worry about where it is right now. This is the actual silver chart. This is trading right now, as you guys, you can see all the things ticking around. So we're not really stalling, but we're also not rocketing. But we're still above the trend line, so this extension is real. and I think should be respected. So wherever that trend line takes us, but see, this is the bottom, and see, this is the interesting part. And so maybe we can take this perspective too. We go to the bottom, and then we go to the top, and then we say where are we going to exit at, right? So if we get that to 110 by January 29th, and so this is where these options games become, I don't want to say fun because that's not really the word. I'm just going to use the word insane. So yeah, let's look at this scenario. Let's say we get one blow off day and we get up here to the 110 using this trend line as support. Okay, let's do this. This will be interesting. So let's do, we'll use 110. What is 110 again? I think I just kind of picked that number. I don't remember why. Okay, but let's use 110, and I'm going to forget my reason, and we're going to go with January. I have a January 30th option because that's a Friday, so. Okay, this one should be more in line with the crazy stuff I had earlier. And what I'm thinking with these crazy ones, because this is crazy, okay? It's the definition of the crazy option, is it's crazy. We'll do 110 target. The thing with these crazy options is I had one that was 7,000% earlier. Looks like it isn't going to quite, I mean, it could. I gave it a lot of strikes. But if it's crazy enough, darn it, it's already going down. Son of a bitch. It's only 1,000%. Okay. Still, I mean, 1,000% ain't bad. But what you could do, if you're in the end of a parabola and you have 1,000% trade on the table, my thought process was, okay, what if we just run this scenario on a rolling, in this case, a 10-day period? Does that make sense? If the pattern doesn't fail and you're looking for that move, what you do, let me pick a strike price. What you do is you'd buy that one to get the 1,000, would actually be less than 1,000% because we're already gapping up 3.5%. But you buy this one, probably buy the cheaper one. Well, I guess it doesn't really matter if you're going up to 110. Maybe it blows past 110. Maybe it gets past 110 if you're lucky. So you do one of these for 1,000%. They're all like, look, 1,002% to 1,050%. Like, who cares? So in that case, I would go for the smallest strike price option. I'd go to this one. If you want the extra 14%, you can go that one. So let's do that. That's going to be January 30th. What is it? 96 and a half? Such a weird strike price. Let's just do the 97. Keep it round numbers. Round numbers are probably more liquid. So we'll stick with the round numbers for liquidity. Yeah. So you take this trade, right, at 1,000%, and then it goes sideways, blah, blah, blah. You exit it, and then you lose like 50%, or you lose 80%, or whatever it is. And then if it doesn't completely fail and kind of sets back up, you go back in again. Because if it hits, you're going to get 1,000%. You could take this trade 2 or 3 or 4 times, and it sucks if you lose, but if you make it small enough. So let's run it like this. Let's say you have a, I need some math. I need some math stuff. I have way too many tabs open. And I keeps bypassing this one. Okay, house renovation cost, perfect. So let's say you have I don't know what portfolio size you guys got, but let's just say what everyone uses, $10,000 portfolio. And let's say you really like this strategy because I'm a pretty smart dude, and but you realize it can fail because you're a pretty smart dude. So what you do is you say, okay, I'm going to take a 5% position size, so $500. And if you win, it's going to be $5,000. Okay, so whatever your risk is, maybe you're willing to risk 10% of the account or whatever. So you have 500. Let's say you exit at 250 and it doesn't work, right? So you're down 250, and then you're down. Let's say it happens again. You're down another 250. I mean, I guess one scenario too is you could just keep holding the damn thing, but if it goes sideways too much, I don't think that's good. See, I need DaVinci up. I need to run this thing. Anyone know a really good programmer that wants to work with me? They have to use Golang or Rust or something performant. So you're down $500, and then it hits, and you made $5,000 minus the $500, right? So, or let's say it just completely fails after that second one. I mean, I would assume after two, given it about 10 days, you're probably near expiration anyways, and you're probably out of the trade. So you've lost 5%. You've lost 5% of the account. For a potential 10x, I think that's good. I'm not mad at that. For me, that's perfectly acceptable. I mean, in terms of, yeah, it's super easily acceptable. So, okay, I mean, I guess that's a few potentials. You've got 500%, 400%, 700%, 1000%. Those are all decent. Those are all good. Those are all good. Solid trades, solid trend, solid backstory. Oh, look at that. You can click here now and, oh, that's new. We're doing all kinds of stuff. See, it hovers when you go up there now. Used to not do that. That's interesting. Okay, so, I think that's good. I don't know about so what was the 7,000% trade? What was that one? Oh, that was 150 by like January or whatever. Oh, you out of here, Blair? All right, bud. Take it easy. If you take the trade, I hope you're successful. Let me know. Where's my other paper? What's happening? I don't know how reality works. Where is that paper? I hadn't moved. I have not moved, and papers are disappearing. There's a ghost. That's the only possible explanation. $200? Okay. All right. Yeah, I'm going to go a little heavier than that. Yeah, see, these are the trades this is what I do. This is what I freaking do. Where are these pieces of paper? They had my trades on them. Nobody heard me crumple up a piece of paper because I didn't. Shoot. Where the heck is it? Oh, it's on the bottom. What? Okay, so the trade I looked at for 7,000% was 150 by February 6th. So let's see how crazy that would look like. Yeah, English, that's what I'm looking at. Yeah, I'm looking at a blow-off top on silver. I mean, it's already been insane. I don't know how much more insane it's going to get. With the sustained volume like this, it's possible it doesn't blow off top and it bases, but I think at least putting in a trade for further upside here is wise. Absolutely. Yeah. So that's what I'm looking at. I love this setup. This was very nice. Very nice. I just think it's very nice. Okay, so I had, and I did it again. I put it on the bottom of my piece of paper. I did it subconsciously. So we're looking at, so the crazy trade is 150 by February 6th. So let's see how horrible that looks. That's February 9th, so that's February 6th right there. That would be monster. If it does that, if you want to trade for going to 150, which is the next larger logical round number, okay, 150. If it gets past 100, it could get right to 100 install, could get to the 110 install. It could do a number of things. You know, Bitcoin got to 11,000, which is past 10,000 installed. This would be the equivalent of going from 100 to 110 installed, which seems pretty realistic, right? Like that seems pretty realistic for that to occur. If it gets up here, and well, one thing that makes me think it could get up here is just if you look at this, like that doesn't look abnormal for this chart. It just doesn't. I don't think that looks bad. Look at that. Looks like freaking Bitcoin, for crying out loud. So, but you know, it also, that doesn't look bad either. You know, it's like, I don't know. I don't know. What do you guys think? 110, 150? You could say it's going to stall at 100 maybe, but the thing is SLV being a derivative of silver itself, these numbers are not matched. So if this gets to 110, this is probably at 130, 140. So if that's 140, maybe it stalls at 150 and this goes a little past 100, 110, 120, 130. So I think that's a possibility. There's a lot of justifications to what could potentially happen. But I think the volume here is really your indicator that we are in a blow off top, scenario. Now this one is this one kind of ran up here and stalled. So again, that can happen. That can happen. Dang, that's parabolic. Could it blow off or find new level given systematic support? I don't care either way. Obviously this is a trade for a blow off top. This isn't a trade for just a pause. Like this is just a pause. This is. I mean, you have good volume here too, but you're not that extended from the 10-day. This really looks like it's going to blow. I mean, it's already up massive. Silver is not. This is not in the beginning of a trend. So it's either going to like stall this week and make the base that you're potentially talking about. It could just keep climbing steadily like this, but the volume is increasing. These trend lines are getting steeper, and if this one holds, then blow off top's definitely on the table. And so that's why I'm looking at these crazy scenarios. No, I would not. Okay, so how I approach this, and everyone's going to do it different. I'm not going to say you can't sell puts. I'm not going to say you can't do X, Y, Z. You can do it all, okay? You just have to do it right. If you want to sell the top, first of all, selling puts is going to cap your gains. Okay, well, I'm going to make 400% English. You're going to make 30. So why even bother? You know what I mean? In my opinion, I would rather, and this is how I've done so well. I've done so well by understanding that I'm good at this, and I understand how to price the options, and I understand the move up. Okay? So this is what I do. Now, at some point, I will look at selling calls on the tops, just because there's no more alpha to be gotten on the top. Like if this if this actually does a blow off top, when I have my DaVinci software going, I will legitimately flip it. And I will sell calls immediately. Selling puts in the middle of a parabolic run, I do not think is wise. And I'm going to tell you why, because unless you're going to cover those puts at that top, right? You would sell naked calls at the top. But let's just go back. If you're going to sell puts now on the fact that it's going to go up, number one, you're limiting your upside tremendously. Number two, you may actually not make as much as you think because the volatility that's going to be implied in the option will increase, which will make the value of your puts increase that you sold, which is bad. So you're fighting the parabola that you're selling against, which to me makes no sense. So the best thing is to go with the trend and just take the damn trade. And if it doesn't work, you exit. And if it works, you take a profit at some point. And then if you want to sell a naked call at the top, if it's a very obvious top, and I mean a very obvious top, okay, then you go. So then you go. If it's a very obvious top, if it tops at 150 and it looks like freaking Bitcoin or something, just sell it. Just sell the call if you want to. Realize it may never come back, and then you'll just sell those and make 100% of whatever that is. But the thing about selling anything naked, calls or puts, is you can only go so much of your account because of margin requirements. So it's a little. For me, I don't play that game. It's just, it doesn't work for me. And that doesn't mean it doesn't work for other people. It definitely does, but it doesn't work for me. If you trade with the trend, you just trade with the trend, period. Now, if you wanted to sell puts coming out of a base like this and you're happy with just getting that 30%, because you don't know it's going to parabolic move, right? Like, in my opinion, the breakout from here is one trade. And then when you're like extended, that's another trade. This is a whole separate deal. So you trade this deal and you either wait and sell the top, right? Because that's a whole different, that's this trade on like the left side here or whatever, right? Like that's another trade. So you have to, like that's this trade. So you have to understand what you're doing. Hold on, I gotta get a Rama link here. There we go, give me a second. Yeah, so they're just all different trades. So you can do all of them. Just do them the best. If you're going to trade the breakout, just trade the breakout and do it the best. If you're going to trade the parabolic move, just trade the parabolic move and do it the best. If you're going to trade the top, just trade the top and do it the best. Right? But I wouldn't mess with any fancy. I wouldn't do covered calls in this position. I wouldn't do a straddle. I wouldn't do anything. For me, what I've noticed, here's what I've noticed. Every time I've tried to do something fancy, I've gotten screwed in one way or another. I tried doing a spread on NVIDIA's breakout, and I should have been up 30%, and I was flat because the short call that I sold appreciated as much as the long call that I bought. So that basically means they cancel each other out. That's what that means. So I made zero while I should have been up 30%, and I was furious. So I don't do that. Yeah, Rom. So to catch you up, I did a little more charting. The numbers aren't as aggressive as we went through this morning. You know, we went from 200 to maybe 900% on the February 20th to get to 150. I kind of modified that a little bit. It seems really, I mean, it could do it. That seems super, super aggressive. If it gets there, great. But I have other targets of 98, 107, 120 here. You know, I'm just going to take a picture of my damn sheet and I'm going to put it on Slack because it's just freaking easier. Because, yeah, we've been doing this for about an hour. So you actually missed a bunch of potentially boring things. All right, let me get this on Slack real quick. I'm going to put it in the public private hour so other guys can use it if they want to. Okay. You know what? Hold on a second. I'm going to... It did a weird... It put it in the wrong orientation. I'm going to edit it so it is rotated the right way. Because how on a desktop it's really annoying, you know what I mean? So, there we go. Mucho better. Some things are easier on the phone. All right, perfect. All right, so it's in the chat room. You can go check that out there. Yeah, but I got for 500%, 400%, 700%, and 1,000%. So we're not as crazy with the one. Now with the 150 targets, obviously things are going to be insane. If we get a move, something like this would be a move from here of 80%, which I mean can happen. Gold is still in an amazing place, so silver probably still has some more juice. But if it does just roll over, and then it's just a dead trade, and we're just done. And then you're taking losses, and that happens sometimes. Happened with me in gold. Happened with me in SanDisk because I did not trade that well. Happens all the time. Happens all the time. So, yeah, those are the scenarios there. One thing I was saying, Aram, is if you want to trade for these big old crazy moves like the 7,000% one, you know, say it does go to 150 and you think it's going to get there. One thing to do potentially is to continuously buy options that are like a week or two out, because if you get a parabolic move, one thing that can happen is you get these two crazy days, and I think Bitcoin was a good example of this, and I looked at this earlier, not in this context, but just the fact that if you do get a full-blown parabolic move, yeah, I guess I'm out. You're gonna have a day or two of just monster gains. So this is 42% on BTC in 2 days. You know, and not much is going to price in that much volatility. So, like, let's just say right now, okay? And I don't know if this is going to be the case or not, but let's just say right now silver goes for 42%. Okay, let's just say that happens. What is the best performing option? Okay? I don't think that's going to happen, but let's just play, like right now it's at, well, all right, I got to do it from here. We're at 81. So the 81 times, let's do 40%. 81 times 40 is 113. So we're going to price for 113 this week, right? This week, this upcoming week. We're going to do, so that's going to be, yeah, we'll just do 7 days. We'll do 7 days. We won't get crazy and do 4 days. What is it? 113. So, oh, must have moved it over here. So let's do 113. So this is next week for it to go up that 42%. I don't know if we're going to do 42% in 2 days, but you can imagine it's going to be a pretty crazy, stupid run. Nothing takes that into account. So if you think it's going to go like that, see, here's your crazy returns. You're looking at 4,000, 3,000 to 4,000%. So I think from that perspective, if we do think that that it's going to get, or if you think it, and this goes for any stock that legitimately has a shot at a parabolic run. Now, not many do, but every year we get a few that do, right? So I think if you can be disciplined enough, hold on a second. I got to get the kids to bed. Hold on. All right. If you could be disciplined enough to, not do this with every stock, but only in certain opportune moments, right? Then you got a shot at whatever, potentially lots of percentage points. So I think if you want to buy this out like a week, you look at this right around 100 is an amazing. That's for it to get to 113. That's amazing. If you want to be less aggressive, you can be less aggressive, right? But there's some potential trades here that are account changing, absolutely account changing, and they don't come along horribly often. I really don't think that they do. Silver, I should have been more bullish on silver. I just should have been, but I just trade how I trade, and it worked out. I'm not too mad. It was one of my best trades of the year, even though I screwed it up in a number of ways. But if we do go parabolic, if we're gonna get one of those moves where we go up so many percent in so many days, here you go. You have a way to do that. You have a way to potentially make using realistic scenarios, making some gains that people think just can't happen. And if you've been here long enough, you'll eventually see something crazy. Not, you know what I mean? Like, there's some charts that we get into that, and it's not all the time, obviously, but you'll see we've seen crypto go do some crazy, amazing things. We don't have options to play with in crypto, but even the stock market, like we have some things that are just downright crazy. And even if you don't want to play with the options, I think the AGQ is great. You buy AGQ, say it just opens right there, and let's say it gets up here. That's 30%. That's going to be like a 60 to 75% profit. So even if you don't want to go crazy and play with options, because options have real risks, okay? If you buy any of this crap, and it doesn't go up, you're going to lose at least 30% of whatever you put in. At a bare minimum, if you're going to go that aggressive, you may lose 50% the first day, depending on what the market does. That like it's just money gone, right? It's just going to disappear. It's just the way that it works. Yeah, and like I said, this thing could falter tomorrow. This trend line breaks here, and it's if it breaks sideways and holds this low, then we'll just wait for the breakout of this, and we'll reevaluate the trade. But we're gapping up to here. If we hold and we do well, we start to move up a little bit. I say you level into some of these trades. I say that's what I say you do. Well, that's what I'm gonna do. You can do what you want to do, but I'm gonna level into these trades. Yeah, and even if you want to take the less aggressive route, right? Even if you want to go for you could still take the excuse me. So there's the February 4th trade for 700%, but that's for it to get to 125. Look, I'm sure you could take one of these trades. Let's say you take it for, let's look at 110, and let's give it 60 days. 60 days. Yeah, that's not very good. Okay, that's a bad idea. That's only 100% gain. That's really not going to work. So yeah, not quite as straightforward as I was thinking there, but okay. Well, then what you can do is trade more in the money. There's two ways you can be less aggressive. You can trade in the money, or you can trade further time frame. I would just do AQB then, or AQG. Damn it! See, I screw it up every time. I would do AQG because you don't have the time problem. If you're troubled by that, and it is a very strange thing to manage, this whole time scenario, and making those choices rationally. I mean, look, let's say it gets up there, 75% gain. If it gets up there, it's still going to do good. Even a 20 or 30% gain as we go up a little bit isn't going to harm you. Okay, it's not going to harm you. If we don't go parabolic, if it's not a blow off top, if we stall sooner rather than later, if you buy AGQ, you're not going to get hurt. I mean, if it falters like immediately, you're going to get hurt. But if you got a bit of a cushion, you're not going to get hurt. If you buy the wrong option, if it goes up and then comes back hard, you still could get hurt. Options are very tricky. They're very, very risky. And one thing I don't want any of you guys to do is just lose money. Like, I don't want, period. I don't want you to lose money. That is the opposite of what we're doing here. Still holding February 20th? Yeah, hold it. Yeah, I'm dumb and sold mine because I'm dumb. But, yeah, hold it. I mean, you got the February 20th. That's great. I think that's fantastic. I just keep it. I mean, you probably have, unless the market, or unless silver, because silver is kind of its own market, unless it just rolls right over. If it goes sideways, you may consider selling, depending on how much profit you've got. But, because you can always get back in. All right, well, okay, so what am I going to do? Let me see here. We have a stupid, crazy trade for a lot of percentage points. Is that going to happen this week? Are we just going to go boom, boom, boom right now? I guess we could. There's not much stopping us in reality. Our volume's already massive. So if the sellers stop selling and they just let it go, yeah, I think silver could have a really tremendous. So part of what I was going to do is a general position, and then I don't know what to call it, but the one where you can make like 7,000%. It's not really a YOLO trade, but it's like I guess a blow off top trade. Blow off top trade. So, I mean, in terms of a general position, what do we got here? What's our least aggressive one? So we have 418 for February 6th to go to 107. That's a January 28, which is like this scenario. Huh. Let me look at some of these options of the options here. January 28th is what? 9 days. What the fuck? I guess that's what the chart shows. Huh. What was the other one I was looking at? We're looking at 110. February 20th for 110. Yeah, sorry, I know you guys can't see this one, but for 171, somehow they've added all these strike prices between this morning and today. That's interesting. Yeah, 110 seems pretty far out of there for a full-blown position size for me. That seems very, very aggressive. Yeah, I don't know. It's going to have to do something pretty good tomorrow morning to really suck me in. I mean, it's already doing something good, and I already screwed this trade up every possible way. I don't know. I don't know what the wise thing to do is, unfortunately. Yeah, it's a little bit tricky to get this thing, dead right on. As difficult. Okay, so 32 days, I mean, seems realistic for a blow off top. My traditional thing is, so that's not too bad. So February 20th. Okay, so let me do this. Let me do February 20th in the mix here. And let's see what our target's going to be. Let's do the 110. What was it? 106, 107. So February 20th. Yeah, pretty basic returns. Not really that aggressive. Not really that aggressive. Yeah, I mean, I guess it could stall at 100 or something. Let's ask about 100. I don't think it'll stop at a round number, but just in case. What? The 100 strike? No, target. Completely missed that. She completely missed that context. So yeah, deepest in the money, 84 that I'm showing. Perplexity? No, I haven't tried Perplexity. I don't know. I don't know which one that is. I've heard about it, but I really don't know what it does. I use Claude and Chat, and I'm not a huge fan of Gemini. So 140 for the 84. Yeah, so the 140 up here would get 245%, which is good. Yeah, so that's fine. For 245 at 110, 107, or 140 at 100. So, yeah, it's really not that different. Eight extra portfolio in 2 months. Difficult to do. I'm capable of that. Just has to be you just don't get to pick the 2 months. And I cannot say it's easy, dude. Holy crap! When you well, it's a little. I mean, I don't know. It's different. Yeah, I did 300% last year. I can't say that was easy. I mean, certain parts of it were easy. Certain parts were really hard. And I screwed up a lot. I screwed up so much. I should have done 8x my portfolio, like 2 additional good trades. Yeah, I should almost have another double under my belt this year if I would have traded SanDisk anywhere near right, but I didn't. And if I would have had some more percentages, like another, 10, 20, 30% if I really didn't screw gold up, but you know. Yeah, we'll get there. I'll get to the point where we're just taking 100% trades all the time. But I need a developer to help me out with that. I'm writing a big old software program called DaVinci where I'm putting all my stuff into a program, and it's going to be my brainchild in an application, and it's going to be amazing. And I'm going to trade 9 figures with it, hopefully 10. We'll see. Or maybe 0 figures. Nah, that's funny. That's funny. I do want to look at gold a little bit too. So, the blow off top trade. I didn't do the blow off top trade. So blow off top trade would be, I think it's 109 by January 29th. I think that one's pretty good. Where's that one? $107? What? Where's these stupid, crazy big returns? Oh, that's this one. That's to 113 by January 26th. Right? Yeah, that's the one. How did we figure that one out? January 13th. 113. Oh, that's like 75% from here or something like that. I mean, I guess that could be, I mean, you need a YOLO trade of some kind, I guess. What do you mean we passed that? We're not going up, not down. What do you mean? You mean DaVinci? Yeah, I don't know what the hell's going to happen with DaVinci. I'm going to have some decisions to make if I get that thing up and going, man. That's going to be crazy. It's going to be a lot of work though. Like a tremendous amount. Media software? Oh no, that is Memento. Yeah, that's Memento. I still want to. I'm a lazy bastard. 10 figures, not 0. Yeah, we'll see how that goes. No, DaVinci is, I'm putting all of my trading knowledge into a massive computer program that is a back testing engine that I'm going to teach it how to view the market, how I view the market. Period. It's just, I know what I want. See, here's the problem, I think, with a lot of software development in people trying to trade. The problem is they're looking for something. Okay? They're looking for something. They're saying, okay, let's develop a strategy that does X, Y, Z. The difference is I have the strategy. Like, it's in my head. I have it. I can explain it ad nauseum. Okay? I can explain it. So I'm just building something. Now, granted, I have to make the computer do things that computers don't necessarily want to do, but, you know, obviously there's going to be a hard part to any project. But I know what to look like. I know when I see it, I'm like, boom, that's it. Like, I don't need to look any further. Does that make sense? Like, I know it. I'm just building. I'm building the Taj Mahal. It's called DaVinci because it's going to be like DaVinci. It's going to look at so many different things. It's going to be beautiful. It's a whole strategy backtesting engine. It's a whole portfolio over time backtesting engine. It's gonna trade the stock market. If I can get data going back to the 1800s, it's gonna trade everything going back to the 1800s, and I'm not gonna stop until it sees exactly what I want to see, and it's even gonna teach me a lot. I mean, obviously, it's gonna teach me so much. But like this whole silver thing, it wouldn't have screwed up this trade. It probably. You know, it would probably take a 2 or 3 tiered position in options. It would have a leverage position. It'd probably have 3, 4, 5 different. In my brain, if I'm Da Vinci and I buy it where I bought it, if it buys it where I buy it right there, then it's going to take multifaceted position. Okay, it's going to take profits on the way up. It's going to take aggressive profits. It's going to make aggressive trades, and it's going to blow my performance out of the water. 100%. 100%. It'll calculate all this garbage we're doing. It'll just do it. Yeah, that's a more than a ways out English. that is so far beyond anything that's even we can't even fathom the technology that will allow us to even do that. Yeah, it's just not even our kids probably will be able to do something like that, but we'll be dead. We'll be dead. I have to hard code it basically. There'll probably be a little bit of machine learning in there, especially with the analysis part of it, but yeah, it's just gonna, dude, oh my god. I need a couple partners to throw in a couple $100,000 a piece, and then we'll just pay someone to do it. But until then, I gotta try to build it myself after my house is done. All right, let's take a look at gold real quick. Oh, I still never figured out my blow off top trade. What am I gonna do here? I don't know. I'm not a. Okay, so this is January 26th. That doesn't seem right. I guess it is January 26th. Okay, so January, all right, we'll do January 26th. So, yeah, so for my blow-off top trade, I'm doing 5%. I'm just going to do 5% of the account. Maybe I'll do 2.5. It's not that great. What do we do? So that's 113. It's to 113. All right, so let's do the. Oh God, I'm gonna spend so much money on commissions on these stupid things. $39. Jeez, that's just stupid money. God damn it. Stuff like this makes me want to not do these trades. I mean, just the amount of. Why does it have intrinsic value at target? I've never asked it for intrinsic value. It's pretty stupid. God, this cost me a fortune. 61 cents maybe? I mean, no matter what I do, I'm going to get a good return if it hits, but the amount I have to pay in commissions if this fails is probably going to hurt a lot. So I'm looking at another screen here. Finish your house? Yeah, no shit. Maybe go with 96. 96, January 26. That's a 3,100% return. At 113. All right, so that'll be a 2.5% of the account, and then I'll do the general position. That still seems aggressive. I'll just do 10% of the account. I'm going small. I gotta go small. Pratik, hello. 2019 vibes. What, with me going live or something? It's been a while. Let's take a look at gold real quick. Gold's interesting. Gold is very, very interesting. This thing likes to hold up. And I need a longer thing. There we go. Okay. All right, that's a little bit better. Yeah, I don't know I'm not sure exactly how far that's going to go. Gold to 5. Well, I guess we got to do GLD. We can't do that one. Okay, we already have trend lines on gold, so that's good. So gold is going to gap up, solidify that as a low. So we already have our extended trend line. So we can look at 457 on February 12th. February 20th is still there. And then, yeah, that's not even a trade. Nope, it's impossible. Yeah, that's not good. So gold for options is off the table. Absolutely off the table. All right. Looks like silver's it. Silver, you're up. Of course, we already kind of knew that. All right, and with that, I'm going to bed. I'm not as happy as I thought it was going to be when I left, when we stopped doing this. I don't know, I was hoping it was going to be more, but I guess if it gets to 150, if I'm right this morning, it's going to get to 150, but as I go through the analysis today and I spent a little bit more time on it, I don't know if it's going to be as aggressive getting to 150. It's possible. It's on the table. I mean, 75% from here is the one whatever, 125. Where's 125? Oh yeah, 75% is 120. So I don't know. That's why I need Da Vinci. Give me some statistics. I'm just doing my best, plopping up stuff here. So, yeah, I mean, I definitely think there's some really big potential here, especially if we go below off top. And it appears that the volume isn't giving anything away. It's keeping everything. So we'll see how it goes. The indexes are gapping down, although we came back. They're a little bit heavy. Soxel, I'm not sure where Soxel is this morning. Let me see. Gap down. Well, screw you, Soxel, for 3.65%. Yeah, you're welcome, Aram. Yeah, I guess we just hope that we'd have bigger trades, I guess. I mean, those are still big trades if this thing blows off top, which it looks like it is. I mean, just, I don't know. 7,000% seemed pretty dope. Maybe I still do the 7,000% trade. Just in case. I mean, just in case. But the 110 seems pretty damn aggressive. It seems, you know what I mean? Like buying the 110 strike for it to get to 150. If it fails, that we're going to be down 75% of that in like the next day. Like the next day. If this doesn't work, if this fails, if this falters, that trade you're down, it's all most of it's gone. So, I mean, I hope it works out. We could pop up and be up here at 93 tomorrow. You know what I'm saying? So, and keep in mind these percentages will be lower because the market's gapping up 4%. So all these trades are already smaller. They're just already smaller by default. We should have caught on to this. I guess, end of last week. On Friday, we should have entered trades. Is really what should have happened, but we can't do everything right. In some cases, we can't do anything right. But I'm damned if this thing ain't going parabolic. The question is, what's the best way to trade it? AGQ is good. You're not going to go wrong with AGQ. You could also buy a deeper in the money call with AGQ, and just try to double that performance. So say it goes up 70%, you can get 100+% at AGQ, which is fine. I mean, if you're mad at 100%, then I guess you're me. I guess you're me because my minimum's 150%. I don't know why that seems weird. That's why I do good, is because I don't settle for trades that don't explode. You know what I mean? Like that's all I want to do is these trades that are just able to run. And but it's always tough in the middle. 1, 2, 3, 4 consolidations. Maybe consider this 3 and then 4 and then 5. Yeah, see, there's work to be done around that on a DaVinci platform. All right, yeah, I better go to a ROM so I can get up earlier and be here for this and actually, fully plan my trades. Because, they probably will change by the morning. But, yeah, we're not getting the 7,000% trade probably. But, a couple 100%, that's what the job's about, man. This job is about doing good trades consistently. That's what it's about. All right, y'all. Have a good night. Stay safe out there, and let's have a good day tomorrow. All right. Later.